Good morning, everyone, and thank you for choosing analysis of today's financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, June 16, 2023, 11:47 CEST. Global stocks are on track to have their best week in over 2 months, driven by optimism regarding Chinese stimulus measures and the strong performance of artificial intelligence (AI) companies. The MSCI World Index has surged by 3% this week, marking its most significant increase since the end of March. On Friday, Asian stocks experienced a broad rally, while European equities also saw gains. In the US, futures stabilized after the S&P 500 achieved its longest winning streak since November 2021. Investors are increasingly confident that the Federal Reserve will conclude its tightening cycle earlier than anticipated, following this week's decision to pause interest rate hikes. This sentiment has led to a greater appetite for riskier assets, coupled with growing expectations of increased government spending by China. As a result, mining, energy, and luxury stocks in Europe have seen a boost in trade on Friday. Georgios Leontaris, the Chief Investment Officer for Switzerland and EMEA at HSBC Global Private Banking and Wealth, highlighted the substantial amount of cash available for investment and emphasized investors' willingness to enter the market. Additionally, the market is closely watching the expiration of a significant number of options contracts tied to stocks and indexes on Friday. Known as OpEx, this event typically prompts traders to adjust their portfolios, leading to a spike in trading volume and sudden price fluctuations. Consumer shares led gains in Europe, with LVMH contributing significantly to the advancement of the Stoxx 600 index. ASUS plc also saw a rise of up to 7.8% following positive sales updates indicating progress in the fashion retailer's turnaround efforts. In the US, Adobe Incorporated shares experienced a pre-market rise of up to 3.9% after surpassing earnings expectations, while analysts expressed optimism about the company's AI potential. Apple Incorporated, which is approaching a $3 trillion market capitalization, remains stable. Despite some bearish calls from analysts, the tech rally has defied expectations. Michael Hartnett of Bank of America Corporation acknowledged his previous errors in predicting the first half of the year, highlighting the unexpected nature of the AI-driven tech rally. However, he also warned of a potential big rally before big collapse, drawing parallels to previous market events in 2000 and 2008. Treasury yield saw an overall increase, and the dollar slightly strengthened. The euro, which experienced its most significant rally since April on Thursday following the European Central Bank's decision to raise interest rates, remained relatively unchanged. ECB President Christine Lagarde indicated a likely further rate hike in July, citing the euro area's inflation concerns compared to the US. While these positive market trends persist, there are warning signs of fragility in other areas. European natural gas prices eased on Friday after experiencing significant swings caused by minor outages at gas facilities in Norway and the planned shutdown of a crucial production site in the Netherlands. Benchmarks in China, Hong Kong, Australia, and South Korea all climbed, while Japanese shares rose and the yen fell after the Bank of Japan decided to maintain its negative rate and yield curve control program. John Bale, Chief Global Strategist at Nikko Asset Management, stated that the decision by the Bank of Japan should not have come as a surprise and warned that authorities might intervene if the yen weakened significantly against the dollar. Before we continue with our analysis, we'd like to remind you of your support for our channel analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. The European Central Bank, ECB, has raised interest rates by 25 basis points to 3.5%, reaching the highest level in 22 years. The ECB has also indicated that it is not considering a pause, and further rate hikes may be on the horizon. However, the bank has revised down economic growth forecasts while raising inflation expectations for this year and the next. Following the Federal Reserve's decision to pause rate hikes, U.S. markets rallied on Thursday. This positive sentiment carried over to the Asia-Pacific markets on Friday, with Japan's Nikkei 225 recovering earlier losses to close slightly higher. The Bank of Japan announced its intention to maintain its loose monetary policy. Venture capitalists in China are seeking investments from Middle East investors amid strained U.S.-China relations. However, there is hope for improved bilateral ties as U.S. Secretary of State Antony Blinken plans to visit Beijing. In a separate development, Bill Gates is scheduled to meet with Chinese President Xi Jinping. Microsoft experienced a 3.2% surge in its shares on Thursday, reaching an all-time high of $348.10. The company's technology chief, Kevin Scott, predicts that artificial intelligence will contribute $10 billion annually to Microsoft's revenue, attracting investor interest. While U.S. markets responded positively to the Fed's rate pause, European traders did not welcome the ECB's rate hike, leading to a 0.13% decline in the Pan-European Stoxx 600 index. BlackRock is preparing to launch a Bitcoin exchange-traded fund, as indicated by filings with the U.S. Securities and Exchange Commission. However, the timing is sensitive, as the SEC is currently suing Coinbase and Binance, two crypto exchanges, over allegations that cryptocurrency tokens are unregistered securities, although Bitcoin itself is not considered a security. Markets appear to be disregarding the Federal Reserve's actions. The S&P 500 rose by 1.22% on Thursday, surpassing the level it was at when the Fed approved its first rate increase in 2018. Despite expectations of a faster tightening cycle and higher interest rates, markets remain unfazed. In addition to defying interest rate pressure, markets are also shrugging off historical trends. June is typically considered a challenging month for stocks, but the Dow Jones Industrial Average has already gained 4.4% and the S&P 500 has risen by 5.5% halfway through the month. The continued rally in stocks can be attributed to the strength of the tech sector. On Thursday, Microsoft, Oracle, and Alibaba saw gains of at least 3%. In extended trading, Virgin Galactic, a space tourism company, surged over 40% following the announcement of its inaugural commercial flight later this month. Key events this week. U.S. University of Michigan Consumer Sentiment, Friday. Some of the main moves in markets. Stocks. S&P 500 futures rose 0.1% as of 4:58 a.m. New York time. Nasdaq 100 futures rose 0.2%. Futures on the Dow Jones Industrial Average were little changed. The Stoxx Europe 600 rose 0.6%. The MSCI World Index rose 0.3%. The MSCI Asia Pacific Index rose 0.9%. The MSCI Emerging Markets Index rose 0.7%. Currencies. The Bloomberg Dollar Spot Index was little changed. The euro was little changed at $1.0954. The British pound was little changed at $1.2796. The Japanese yen fell 0.5% to 141.03 per dollar. The offshore yuan was little changed at 7.1148 per dollar. Cryptocurrencies. Bitcoin was little changed at $25,523.50. Ether was little changed at $1,668.75. Bonds. The yield on 10-year Treasuries advanced 2 basis points to 3.74%. Germany's 10-year yield was little changed at 2.50%. Britain's 10-year yield declined 3 basis points to 4.36%. Commodities. West Texas Intermediate crude was little changed. Gold futures rose 0.3% to $1,975.80 an ounce. Good morning, everyone, and thank you for choosing Market Briefing analysis of today's financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial News, June 2023. In conclusion, we'd like to thank you for watching analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more fascinating news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.